Hello, everyone. Today, I don't want to talk about a specific strategy or a specific stock or review any trade. It's more about the universe of a stock that I review every day and how to increase the probability of getting into a trade in a stock that probably is gonna continue moving in the direction that you want to. In this case, something that I like to trade is trend, and you have here this idea of stages on the trend and how the cycle, how it moves, right? And this is something that became popular with William O'Neill with the method Can Slim. Also, Stan Weinstein has a really good book, and there is another book really old, but it's good from Darbax. Basically, what they say is that the stock is gonna move in a cycle. When they accumulate, move up, then you have the distribution phase, and then it's gonna move down, and it's gonna repeat the cycle. The thing is that for me, what I'm trying to identify is what are the stocks that are moving up in this phase if I'm going long, or and what are the stocks in this phase marked down if I'm going short. But also I want to avoid this distribution and these accumulation phases. Okay, because the stock is gonna go in a range, and because I'm trading on trend, I'm gonna have multiple fake breakouts. Okay, so this is the idea. This one, let's put it green. If I'm going long, I want to find the phase that is bullish for me, trend up. And if I'm going short, that I don't do too much, I want to find this phase. But also, the general market needs to be in one of these phases also, right? It's not the individual. I want to kind of pick stocks that are going in the same direction that the market, general overall market is going. But now, how I do that? And that's what we're gonna get into. How I said, William O'Neill, he has a book. I'm gonna put in the link. Stan Weinstein has another book, and then Darbas. That is very, very popular book. But it's good. It's simple and it's good. And that's what I'm trying to replicate here. That simplicity from Darbas. So the idea is that when a stock enters the general market is in stage 2. Let's talk about long for now. When the general market is going up in stage 2, I want to identify the stocks, the best stocks that are going that way. And obviously we have too many tickers to review every day. So I want to create a cohort of that universe, something that is going to be tradable, something that I can review. And again, this is not for a specific strategy. It's just to define what is the pool of stocks that have high probability to continue going in that direction. William O'Neill uses many other factors, volume and EPS, revenue, sales, all that. There are some fundamentals that you can do manually, but at the end, you want to start creating a small pool, and then from there, you're gonna go manually analyzing these fundamentals. The first scan that I can create is very simple. I want the stocks that are liquid. So for that reason, I choose a market cap above 1 billion. I want a stock more than $10. Let's put $10. So we avoid penny stocks and all that. And I want also stocks with the average volume in the last 55 days greater than 1 million. And that's gonna give me more than 1,000 stock. So this list that is on the side is the result of the scan. And then I'm gonna start from there. Okay, so this is the scan, very simple, but it's gonna give me like 1,400 stocks. It's a lot, right? And you're gonna get stocks like this. This is not good for me. And you're gonna get stocks like this. That is really nice. That you can identify in this stock. For example, this is a stage 2. This is a stage 3 distribution. And this is stage 4 trend down. And here it was a stage 1 accumulation. So this is an stock that represents what I'm looking for, right? How can I start getting this list from 1400 to something that is easier for me to calculate? This is not good. This is a little choppy, but it has some places where I can trade. Right. So the first thing is that I can plot something very simple that are moving average. And I'm gonna activate this one. That if you see here, I have three exponential moving average, 13, 21, 34 Fibonacci, just because I like it. And then I'm gonna call, I have three because I'm trying to get some trends that have strength and momentum. So I'm gonna get 13 that is fast, 21 that is medium, and 34 that is gonna be slow. So I'm gonna activate that. And right there, you can see that when these three EMAs, they are stacked. I mean stacked like one above the other one. 13 here, 21 in the middle, 34 down. If it's in this, I want to go long. But if it's backwards, I want to go short. And again here. And when it's choppy like this, I want to stay out if it's possible. I want to clarify that this is not something that is going to be tradable, profitable. This is a disclaimer. It's just as a general idea to show how I start picking something, right? So in this case, I have this one. This is going to be the first factor for me. I want to find stocks that are moving above these three EMAs, and the EMAs, they're going to be increasing the space between them. Simple, right? All right, but this is not enough for me. So let's introduce some categorization. And for that, let's put a MACD, for example. Is something also popular. Everybody knows it. And for the MACD, I want to see only the histogram. I don't care about the lines. And combining this stack ranking and this MACD above zero, below zero, I can create some categorization and put some colors to the chart. So let's do that. I have this one here that you can see also the code. Basically, I have the input for the same EMAs for the stop loss because I'm going to activate some trading here, simulation. Another variable if I want to show the simulation or no. And also the direction of the trade if I want to go long or short. So in the same way, I calculate the EMAs and then I create like, I want to know if they are stacked or not. If 13 is above 21 and 21 is above 34 and the close value is above 13, this for me is positive. And then I have the MACD, how to calculate the histogram. You can use the built-in code for this one, but yeah, I wanted to show it in case that you want to move this to trading view, whatever. It's a simple formula, okay? So now that I have these two, I can basically create three colors. I'm gonna call bullish if the histogram is above zero, but also is positive stack. It's gonna be bearish if the histogram is below zero and also is no positive stack. And neutral is gonna be the opposite of those two, right? So if I activate this one for now, it's gonna change that. And then right here, just like that, you can have a visual representation of when to go long and when to go short and when to get outside. No decision here, okay? This one is choppy, is what I'm saying, that if it's trading in a range, you need to avoid it. This is more for short, stay away, basically not too many longs. So this is not good. But again, yeah, still, I have the colors, really nice. But still I have 1400 tickers to decide. Basically, I want to move that categorization. I want to quantify that and create some kind of sorting. And in this case, I have this filter. Actually, this is not filter. This is a sorting. And basically, I have the same values. I have the EMAs, if it's positive stack or not, the MACD, and then I want to find out in the last 233 days. This is a little bit more than 1 year trading days. How many of those days were red? I'm gonna assume that, and then in the sort, I'm gonna show you the total for that. And this is exactly what you're seeing here. This is telling me 104 is telling me that in the last 233 days, I have 104 red days. So because I want to go long, in that case, what I need to do is sort this ascending. I want to prioritize the best stocks. Now for this sorting, I'm putting 233 because I want to show you, to make my point. But if for trading, probably you want to go shorter, like 21 days, 13 days, because you want to capture the stock when it's starting moving. To make the point, if I do that, you're gonna see how pretty is this, right? Red in this downtrend, green up, green, green, and in between. If I go to the second one, same thing, third, so you get the point. So in that way, really simple. I can get a list of stocks that are strong using simple strategy, and I can browse all of them. And then based on my strategy, I can start looking at that, right? I don't know, whatever it is. This is if you are trading, you like to trade breakouts, for example, you have this high and this candle that is bearish. You have the consolidations on red, but still keeping the stocks mostly above the EMAs. The next time that you see this green, probably this is an entry, and maybe you want to try. Maybe you want to check something else. I don't know, volume, momentum, whatever it is. That is your strategy. I don't care. But you want to be choosing stocks from a list that is already classified for you based on the strength. Once that stock start moving up, it's probably that it's going to continue moving up if they have good fundamental. And again, I haven't checked the fundamental here. Everything is simple, quantify, right? And then you, after this, you can complicate whatever amount that you want. You can include other indicators, other ideas, whatever it is. But you're gonna be choosing from something that is probably is gonna be good. Okay, so cup handle maybe. Okay, so you get the point, right? How I check visually, it looks nice, but I want to simulate that trade a little bit more. So if I go back, I'm gonna have a second part for this. After the colors, I have some trading logic. Very simple. What is an entry for me? When the MACD is above 0 and the stock is above the fastest EMA 13. And what is an exit? Well, either the histogram is below 0 or the closing, the stock went below the stop loss. And that stop loss, I define it here, that is gonna be the 21 EMA. So once I have that defined, for each trade, I want to trade, let's say 10,000 all the time, right? So it's equal. What you see each trade is based on the same amount of money. And then if I have an entry, I'm gonna buy. If I have an exit, I'm gonna sell. And this is for the long. So I'm gonna activate that. Trade simulation, yes. Long, yes. Okay, apply. Oh, and then let me activate this display the P&L, profit and loss. All right, so let me go to the first one, and you're gonna see when the stock is trading sideways, it's a little bit choppy, but it's fine. I entry, the stop loss is close, entry, close. But if I enter and the stock move up, then I get money. If the stock is going down, I don't have any entry. Super important. I'm gonna trade what has some kind of probability. But if it's going down, I'm gonna avoid that. I don't even get the signal for this. And as soon as I get the signal, I buy again. And if the stock starts moving up, you see, profit goes up. And once I sell, because it's about, I receive the exit, I don't trade again. So my drawdown is control. Let's put in this one, same situation, even better. If I go to Fox, same thing, even better. If I go to T-Mobile, no, the AT&T, you see, at the beginning it was a little bad. If I go to T-Mobile, I don't know. I'm putting stocks here randomly. I'm avoiding bad times. I'm trying on the neutral, and if it doesn't work, it's fine. I just get out quickly with a small loss. But when I enter and there is a run, then that's the time where I made the money. If I go to Tesla, for example, same situation, sideways, small loss, small win, whatever it is, start running. I made some. Bad time, I keep my money, really important. And then when it's green again, start going up, 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 up. When it's a bad time, I don't even get a signal. So I don't even have to worry about this one when it's a bad time. And the same thing, if you start going up, down, exactly here like this, that's fine. Now you can combine this sorting with the scan, put the same code, and the scan is gonna give you only the best one. Instead of giving you this list that is huge, it's gonna give you only the one that works. Now, I kept it open with the sorting because I want to show you also the shorting. Because in this case, this is for going long. But what happens if I, for example, let's say that I go here and I specify now I want to trade only shorts. It's still positive, but I'm gonna be trading the red candles. Yeah, make money, positive, I don't short, small, bad time, shorting, make money. And then if I change this sorting and I'm gonna get at the top, the bad ones, the biggest amount of red, then you see here that I'm gonna be shorting only the bad times. Very simple. So far here, I have only used EMAs, MACD, knowledge of market cycles. Those 3 books that I mentioned, I'm gonna put in the description. And besides that, it's just common sense and manage the trade. Basically, that's it. You can stop the video, copy the code, translate it to TradingView if you need to.